Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with this Thursday guest and expert, Mr. Jonathan Twomley. How you doing, sir?
I'm doing great, Michael. How are you this morning?
I'm doing well. You knew we were going to talk about this topic, right? I'm the
Oh
residential
yeah.
guy. You're the multifamily guy. I actually want to turn this. So first off, folks, we are going to talk about Zillow exiting the iBuyer program. Jonathan has some questions for me, so we will get there. But I'm actually looking at this and my head is like, okay, could this be a moment where the market turns, right? Zillow was clearly betting on appreciation. They won until they didn't. Clearly made some mistakes, which we'll get into in a minute. But what I'm looking at this is like, I wonder if there's a Zillow equivalent in multifamily syndication. What I mean by that is maybe there's so many people that have been syndicating, new syndicators, bad deals, and you just can't do those anymore. So we'll talk about Zillow, but I'm going to ask you about your area and like, could this be a moment where maybe there's some pain with some syndicators? So we'll talk about that. Again, I just sprung that on you, but let's talk about Zillow first. So maybe some questions for me first.
Well, yeah. I mean, I really want to know what you think about this, like whether you think this is going to have an impact or not, and what it really means. Is this like a Lehman moment for single family houses, or just a blip because the market's so strong?
Yeah,
it'll just absorb this.
The market in totality, it's a fart in the wind. It won't impact. There are a couple of cities where they own maybe a disproportion. I heard about Jacksonville, Florida, for example, where if they took all their inventory, it would make inventory go up 15%. In a market like we're in now, that probably has, that's probably 45 days of inventory. But here's the deal, what I think. So first off, Zillow's CEO needs to be fired. He said today, well, I guess it was yesterday, I read it today. He said, Jonathan, turns out predicting housing prices is a tough business. If you are flipping homes and you are betting on housing appreciation, you're an idiot. The only reason Zillow was doing that is because they thought they had the biggest mousetrap called Z estimates, and the money wasn't theirs. They have $4.7 billion of cash on the balance sheet. They got drunk on their own supply and they were stupid and they burned $550 million. The CEO needs to go. He needs to be fired. He was not running a flipping business. He was gambling, and the odds were not even in his favor. He was buying houses in a market with record low supply and winning earlier in the year. As soon as that market flattened out at all, he was destined to lose. So for example, I talked to an agent the other day. They priced the house out at $390. Zillow paid $417.
Wow.
Right. And this agent's aggressive on prices. And Zillow paid $27,000 more. There was a running joke in Phoenix, and this is probably other markets, but I know people in Phoenix that their business was to flip to Zillow.
Wow.
So why would anybody flip to Zillow, right? iBuyers, they're cheap. Well, it was because Zillow was known to overpay. They were just bad at it.
That's interesting, because I remember, I hadn't done this for a long time, but I remember looking at the Zestimate for my apartment on Zillow, and I was like, you got to be kidding me, because it was way low. I was like, this is not, I don't know where this is coming from, because this doesn't make
any sense. Yeah.
Doesn't make any sense at all. Like, how this is your estimate? Like, it's like 3/4 of the value, what I know the value of this house to be based on what just sold in my building, and like, where is this coming from?
Right.
So to find out that on the other hand, they're like overpaying based on their estimates, just clearly their algorithms were not working.
Well, they weren't. Well, you should. First rule of flipping is you don't bet on appreciation. You don't say the market's going to go up 5% during my hold period. That is beyond ridiculous.
Right. You're looking to buy
today's value.
Right. Well, not just that, but you're looking at, well, I'm buying this at a discount because it's in bad shape. And I know that like the delta between the fix and what I can sell it for right now, it leaves me with a profit. Right. And that's the flipping equation. Right. So I know that, like, when this is renovated, I'm going to buy it for $280. I know if it's fully renovated, it would sell for $410, and it's going to cost me $100,000 to renovate it. So I'm going to make $30,000. Right. So that's like the equation at today's prices. Like, you're not saying like, oh, hey, I'm going to buy it at, $410, today's price. slap some paint on it, and by the time I'm done holding it, it's going to be worth 425. Right?
That's
Not,
essentially what Zillow did. Exactly. They were buying they were buying what turns out to be cleaner stuff most of the time. They were doing, and their flipping business was, first off, cardinal rule, they paid too much, just flat out paid too much. Then they were doing half-ass remodels. I mean, like their tiles weren't even straight and just horrible stuff. I've seen pictures.
Is there like YouTube videos about this?
Oh, there's agents going through. It's bad. It's bad. And then they were being unrealistic on price. And again, the market bailed them out. The pandemic bailed. Zillow would have been out of the flipping business a year earlier if we didn't go into a market with record low inventory.
That is interesting, actually. So it was just that. Oh, wow. So I didn't even realize that COVID bailed them out.
Oh, absolutely.
Of a bad business model, but it still came up to bite them in the end.
Well, in the end, if you pay too much for your assets, you're eventually going to lose. It's just that simple. So back to the real question at hand. So here's the deal with Zillow, right? They now are sitting on 7,000 homes they need to get rid of. I believe, I personally believe they're going to try to get rid of them all in Q4, right? They're a business. They have earnings reports. They've just had this. They just blew up their Q3. They've now taken reserves. I'm sure they want them off. So again, sitting here with somebody who had his both balanced income statement and balance sheet as an accountant for a big Fortune 500 company and somebody who invests in real estate, I'm sitting here going, the only way that Zillow can get these off their books in Q4, which, oh, by the way, is, I don't know, 50 days left, 55 days, is they got to sell to Wall Street or they got to sell portfolios.
Yeah, I was going to say that's what they do. They take a haircut,
they have to.
and they sell the whole thing en masse to private equity. And I'm sure that those conversations are going on.
Oh, I'm sure as we speak. So again, if that happens, these houses will never hit the market. They will never be perused or looked at owner occupants. They'll take a haircut, but they've already got a reserve, so they don't really care, right? It's not their money, right? It's not their money. And they're going to get this behind them quick. And these will just be rentals. Second, I had a conversation earlier in the week. Zillow should actually do what I think you said. Who was it? You said somebody in Japan held their assets during the 1980s.
Oh, well, yeah. So before we got on the call, we were talking about, maybe one of the topics today would be about China and what that's going to look like, in my super educated view, right? But a lot. So, the Japanese real estate investors from the 1980s are famous for buying trophy assets and actually intentionally overpaying.
Intentionally, yes.
For stupid reasons, like they wanted to be able to say that they had bought the most expensive building in the world, like just dumb stuff like that. And then the market fell apart in the late 80s, and a lot of them panic sold. If they had just held, they would have been fine.
Oh, yeah.
But they overpaid, then they panic sold. They took a beating, except for Hitachi. Hitachi was the only one that just was like, we're just holding it, and they did fine. Yeah. And so
we'll get into Japan and China next, but I forgot the name. So Hitachi. So this is what I actually got there without knowing that story. I'm like, Zillow, you overpaid. You're upside down 10, 15% in your portfolio of 7,000 houses. What you could do is you could become a landlord.
Yeah.
You could actually expand your business and become, Rent-A-Meter or whatever it is for Zillow. Or you could partner with somebody, go do a 49-51 partnership with someone. Frankly, if Zillow wanted to save their business, they should become landlords. They've proven a model to buy. They just add an exit. They're not going to. They're done. They're going to panic sell, but they shouldn't. And then there's a lot of people out there going, nope, they're going to list houses one at a time. I just don't see that. If they're going to list them one at a time, they're going to be selling homes for 6 months.
They don't need to, right? No. Here's the thing. So I have a friend. I used to serve on a board with him. Who works at Ackman Ziff, which is a big debt provider in real estate across all food groups. He said that and he's like one of their top producers at Ackman Ziff. He told me, and he's been saying this for years, the fastest growing part of his business is providing debt to private equity funds to buy single family homes, right? That and he said, and last time I spoke to him, he said, like, that's basically like the biggest part of my business now is underwriting debt for private equity to buy portfolios of single family rentals. So there is no, why would Zillow go through the headache of selling these things one at a time when
Yeah.
it is incredibly easy for private equity? First of all, the demand is there, but second of all, the debt is there too.
Dude, they're
right? So-
parading people through right now. Here's my.
Oh yeah.
Yeah.
And listen, they may wind up actually coming out of this okay, because they may wind up getting a couple of these private equity funds into a bidding war with each other.
True.
Right.
Yeah.
And then their haircut, they wind up with like a very small haircut on this, right?
Yeah.
Or maybe they even break even on it, because the demand is so high for these things. If the PE funds are looking at these as rentals, right?
Absolutely. They are. They will be.
Yeah. They're not looking at them to flip. I mean, their ultimate exit is to sell them off, right?
Yeah, but that's
right. But they're going to run them as rentals
for years, decades, maybe.
5 years, right? Or whatever, 10 years. And so, so Zillow may wind up, actually doing okay out of this once the PE funds parade through and start bidding against each other for these things.
Yeah, I would expect sometime in December, probably right around I bet you they're going to sneak it in right before Christmas. It'll be like one of those, always right before Christmas, people have these announcements because they think they get missed, right? So maybe like December, I don't know what day 21st or 22nd is, but they're gonna sneak the announcement. Hey, Zillow just sold 3,500 units to blah blah blah, and it's just going to be done. They just want it behind them.
Yeah.
So in the end, they're not big enough. 7,000 units is a blip when there's 6.5 million homes or 6 million homes. They are concentrated, so there may be some. But again, if Zillow listed every home they had on the MLS today, that would have pricing deterioration. That would hurt the market. Right. They're not gonna do that. They're just not gonna do that.
Yeah, and even if they couldn't sell to private equity, they wouldn't do that, because they looked at the experience of the banks from the great financial crisis.
Exactly.
And the banks,
that's a bad idea.
Yeah, the banks didn't. I mean, some of them did, but a lot of them held that inventory back because they didn't want to essentially like undermine the value of their own inventory, right? By dumping it all in the market.
Well, the first 6 months of the 2000, late 09 to 10, they were doing, or at least I saw it in my market. Like every Monday it was a running joke, right? Every Monday, a big wave of inventory would come, and the next Monday was, and then they started to kind of wane down because it was just eating their own book of business. So it's pretty crazy. So yeah, I don't think Zillow, but let's go back to where I started this. Again, a lot of people are looking at this as, maybe it's the sign that housing is going to crash and all of that. I wonder if there's an equivalent in syndication, right? You and I have talked for years about all these new syndicators out there with relatively no experience being able to actually raise money. And I'm like, could the party be over there? I don't know.
I don't think so. Okay. I think this is going to continue, because I think that what's driving it right now is the anticipation of future rent increases, right? And which have been happening, right? Coming out of COVID, where we had sort of stagnant and even declining rents in certain places. Now the boomerang back, right? So there's huge rent increases that people are able to get, and they're using those rent increases to justify overpaying for assets, right? And I think that's going to continue for a little while. Now, what'll upset the apple cart is if the rents start getting soft. But I mean, as you know, yesterday, we haven't talked about this, huge job numbers. What was it yesterday, right? And
ADP report 543 or 576 or something.
Yeah, so the economy's cranking, right? We've got kids 5 to 11 getting vaccinated. I mean, like that's going to be huge. I know a lot of people personally, myself included, who have been holding back from doing stuff because they still had like their kids or one kid not vaccinated, and they're still being cautious about. That's all. Like the Christmas season's gonna be wild because all these kids are going to be vaccinated. That's going to put the economy on steroids, I think. And so all that stuff is working in favor of multifamily right now. Plus all the housing crisis, all the housing shortage, all these things that we've been talking about. I think that what could upset the apple cart is rents not going up as fast as people want. And also interest rates. Like if interest rates go up, I mean, I know there's people out there who are saying, oh, interest rates have nothing to do with it. I frankly, I can't even get my head around the argument. It's
I don't get that either.
So nonsensical to me.
Yeah.
But interest rates, somebody in my private mentoring group last night pointed out something very interesting, was not just that interest rates affect like your ability to pay for property. They affect your tenant's ability to pay rent. Right?
Yeah.
Because if inflation is going wild and you know, their wages are not keeping up with that inflation, and now they've got to pay more for gas, they've got to pay more to buy a car, they've got to pay more for groceries, like they get squeezed on rent, and they may start pushing back on some of the rent increases.
Yeah.
So, you know, I think that's really the danger in the economy is
Okay.
if inflation gets too hot and the Fed has to raise rates, then that could kind of put it, you know, because listen, that always puts a damper on the economy if it's too fast, you know, too much too soon.
Correct.
So
cool.
We'll see what the Fed does.
Very cool. Well, I look forward to topic number 3. What can I expect from from in China based on your Japan experience? But before we get there, how can people follow you?
So if you would like to join my my community, you can join my free Facebook group, which is called the Multifamily Investment Community. So just search for that on Facebook. Let me know in the questions that you heard about me here. Happy to have you join the group. And the other way, if you just want to come and invest with me, please Google Two Bridges Asset Management, and you'll find my website very quickly. And just there's an investor form there you can fill out, and you'll be in.
Very cool. Thank you, Jonathan.
Absolutely. Thank you.